Do we have Councilmember Coombs here?
I have not seen her on here yet.
Okay, well, we have a quorum, so let's go ahead and get started because we have a lot on our agenda. All right, first up is the meeting minutes from May 7th. Councilmember Bergan, are you okay approving those?
I am.
Okay, those are approved. Next up, Bill Levine, April 2025 sales tax chart.
Right. Thank you, committee. Again, this is Bill Levine in the budget office to talk about sales tax for the month of April. And thank you, Candace, for helping me on the
Terry.
slides.
I don't know where Candace went. Sorry. Oh. I'll get there.
Thank you, Terry. Wow, getting
wait,
some nice
Terry,
support.
Terry, are you showing that? I can show it. I'm sorry.
That'd be great.
Okay, no, because I thought he was showing it. That's why I apologize.
Well, I can stick with this one if you want to switch. It's up to you.
There we go. Excellent.
We got you. Yeah.
Thank you both. So again, going to talk about April collections. You can see there on the far right that we collected 26.8 million, which was 2.3 million, or the 9.3% is the number you'll see on that graph. 9.3% more than what we collected in April 2024. So really I guess the best month we've had this year. Two factors really drove those results. The first, that there was some panic buying right before the implementation of the federal tariffs. So there were two areas where we really saw that. The first was in electronics and computers. And that sector was up 35.8% compared to April 2024. So a lot of sales occurring in that sector. And then the other one was in car dealerships, and those were up 22.5%. So quite a few cars selling, hoping to get in at prices before the impact of tariffs were felt on those prices. So that certainly was sort of a one-time bonus that helped us a lot. And to be honest, that was the smaller of the two factors. The other factor was that we had really high variable sales tax. So we collected 1.7 million in April from the variable sales tax payers that I track, and that was almost a 94% increase over April 2024. So with those good numbers, we now stand about $500,000 behind the budget plan for sales tax. So just to put that a little bit in perspective, a month ago, we were 1.5 million behind that plan. So we've certainly closed that gap quite a bit, but do remain a little bit behind the budget plan through April. So I know there's a lot on the schedule. That was all I was going to present, but I'm happy to answer any questions that you might have in regards to sales tax or general fund revenue.
Yeah, I have a question. It's pretty similar to what I asked last month. But, we've already had initial conversations about, I think, around a $25 million budget shortfall for 2025. But again, the second month in a row, it seems like we are not tracking to that level. Mm-hmm. And maybe that's a better question for Greg, but it ties into this because we're sales tax driven. I guess I'm still failing to see how we go from $500,000 4 months through the year to $25 million in December. When we already acknowledge that we budget very conservatively. So I'm feeling a disconnect, I guess.
Yeah. The one thing I would say to that is that the 25 million is actually the whole entire fund, revenues and expenditures and the whole gamut, which was already 11.5 million out of balance. In terms of sales tax, I do think that we've had a couple of months that are better than what we expected, and so that's good news. It's going along with a couple of other things. I would guess bottom line we're probably about in the same place, which isn't a bad thing. It means that bottom line we kind of know where our numbers are in terms of revenues. But for example, capital's down. For example, lodgers tax is down. On the other side, interest is up, and so but it kind of all rolls around together in terms of that.
Yeah, no, I appreciate that. And that's why, I know this isn't exactly a budget conversation. This is just the sales tax revenue portion of that. But right. So what I'm hearing, and tell me if I'm wrong, is that we are still tracking for $25 million shortfall this year.
Next year, 2026.
Or 2026.
And I would put it this way. If we used the same math that we used in our pro forma, 4.5% wage growth, this thing, that thing, all of the assumptions that we put into that, if we use all those assumptions, yes. But of course, we're currently working on fixing that right now. So you won't, we'll be covered.
Okay. So it sounds like we need to, we need to see a couple more months of performance before we really have a better grasp on what the situation is this year that will impact us for next year.
I think that's accurate. I think that's accurate. These are good news. That April it was pretty darn good news. But you know, because a lot of that was panic buying, that can't last forever, and that's kind of borrowing from the future. So we got to kind of see how that works.
Yeah. No, understood.
So I think it's good news, but it's no reason to pull us off our current plan of balancing.
Got it. Councilmember Bergan.
Yeah, I mean, just along the same lines. So you're saying we're still tracking for the 25 million deficit for 26 versus possibly tracking at the 11 or 12 million that we originally thought we were. Like
That's right.
what was the gap?
The difference is going to be the new leads projections. So remember,
Right,
we were already 11.5 million out of balance, and the new leads projections were
Right.
less for 2026 than they were last year.
Right. So we
And so
projected
Yep, so-
11 million deficit, and because of leads, we're going to double it.
Well, because the leads revenue projections went down in auto use and sales tax and capital and building material. Some of those are even tracking worse. I will tell you, the auto use is tracking worse than the leads projections currently. So
Oh.
there is there's mixing around, but yeah, I think we're right about where we need to be in order to have that level of cut.
So by the time we do our budget, like our budget workshop, after the budget
Mhm.
meetings and then the budget workshop, we will have a better idea, right?
We would, and we'll give you more information, more specific information about that during our one-on-ones,
Okay. All right.
how it's all looking.
Thank you.
There's a couple of phone numbers, so I don't know if Councilmember Coombs made it on or not. Okay, I'm gonna think not. So, all right, thanks, Bill. Appreciate your presentation.
Thank you very much.
Next up, Teresa Sedmak, Annual Investment Portfolio and Policy Review.
Yes, good afternoon. I have included in your packet the city's investment policy. We're not recommending any changes to it this year. It was last modified in June of 2021, but I have included it in your packet. I think I've gone through the investment policy with all of you, and I'm happy to answer any questions about it. But generally it outlines the goals, objectives, allowable investments, concentration limits and performance benchmarking, that kind of thing, that governs the city's investment portfolio. And I have Mary Donovan on the call, and she's our investment advisor, and is going to go over what the portfolio looks like right now, after I answer any questions that you all may have about the policy itself.
So a question I have on the policy has to do with allowable investments. Is that driven by, like, do we decide that, or are there state and or federal laws that also dictate what we can and can't invest in?
It generally follows state statute. Yes.
Got it. All right, appreciate that. Councilmember Bergan?
Just, I don't know if this would affect the policy, but, we went to DC and advocated to keep the tax exempt bonds. And so if those are not maintained, does that change anything in our policy on the bond?
No, that's on the borrowing side. This is
Okay.
simply on the investment side.
Oh, yes. Okay. Thank you.
Okay, I think no more questions on the policy. Do we want to move on to the portfolio?
Mary Donovan is from Insight Investments, and she's going to go over the portfolio itself.
Great. Well, thank you right off the bat. Thank you for the opportunity to present with you today. And we do have information on the portfolio to review with you. The information starts here with a look at the diversification of the portfolio. We're going to run through some big portfolio metrics, some performance information, and then we'll get into the holdings in the portfolio. If you have any questions as we're going along, please don't hesitate to ask. Happy to discuss any of this in more detail. The holdings information in front of you is as of March 31st. It shows that the cash component of the portfolio at that point was running at about 65 million. That's irregularly high, was in response to cash flow needs that are seasonal in the first quarter. So that cash has been drawn down and is now what is more typically quite low in the portfolio. Then we have the domestic corporate bonds and international corporate bonds representing about 25% of the portfolio, and then agencies and treasury securities representing about 63% of the portfolio, and municipal bonds representing about 5% of the portfolio. So the asset allocation is fairly consistent over time, variation as we favor one security sector over another depending upon valuations. On the next page is the maturity distribution of the portfolio, and you'll notice that we do have quite a lot of funds maturing within the next year. It comes out to about 34% of the portfolio. We manage the portfolio to meet the objectives of the investment policy, which are safety, liquidity, and yield. And the liquidity piece is certainly a very big component of what we work on with the city. So on the right-hand chart, you have a maturity allocation map that shows the different allocations and where they are from a maturity perspective. And we take our longest maturity exposure in our government securities, the treasury and agency portion of the portfolio. Domestic and international corporate bonds run with about a 1 to 1.5 year average maturity, because by policy, those are limited to a 3-year maximum maturity. And that 3-year maximum maturity is consistent with state statute as well. So moving on to the next page, we have a quick look at some of the performance information on the portfolio. We have a graphic representation here of the amortized cost return on the portfolio. And in that methodology, you're basically holding the yield of the securities that you purchase the bonds at steady through their life. And we're just simply comparing it to the changing yield on the 2-year treasury note. And there's a long period of underperformance when interest rates rose rapidly with the Federal Reserve increasing rates. And now the portfolio has really caught up and is actually outperforming on a yield basis here in March with an annualized return of a 4.24 versus the 2-year at a 3.98. Just 1 month annualized returns, but you can see the improvement in that yield metric. On a fair value basis, the second chart, you're taking into consideration the change in the value of the securities on a month-over-month basis. And here we're comparing it to an index, which is the 1 to 3 year treasury. And so in that reporting paradigm, the performance is really very good, coming in here in March, annualized returns of a 5.91 versus the index at a 5.63. And really solid performance over the longer period, which we'll be looking at here in a few more pages. So there's that quick look at performance, which is really quite good. And then on the next page, 7, you have the size of the portfolio. And here we're just looking at the term securities, not considering the cash component that the city maintains for their operating expenses. But the term securities ending here in March with a balance of 789 million. The portfolio had been at a high back in March of 23 when it was closer to 900 million. That term security portion has decreased a bit over time as there's been some spending, some large expenses. And then also, of course, there's the cash component on the other side. Those two pieces come together to give you the whole portfolio look. Then the duration, which is simply a reflection of the average maturity of the securities in the portfolio. We're working hard to extend that. It's currently running at 2 years. And that's been in response to the fact that interest rates have increased, and we want to lock in those yields for the benefit of the portfolio performance in the future. So that's been a really important part of our strategy, is to extend that duration. And that in part is why the Treasury and agency allocation in the portfolio is as high as it is, because we can get further out the yield curve, longer duration with government securities than we can with corporate bonds, which are again limited to that 3-year maturity horizon.
Hey,
So,
Mary,
on the
I have
next-
a question on that.
Yes.
Yeah, so I noticed that, the duration has kind of slowly crept up over the last couple of years, slowly and steady. Are we moving from cash to other types of investments to increase the duration, or just some of the other investments we have, are we kind of rolling those into longer term? Like what's driving that?
It's been, the city maintains their cash position to ensure that there's adequate liquidity for spending. So that's relatively consistent. The change has been the addition of longer term securities in the portfolio to lock in the yields that are available. That's the way that we've gotten that duration extended. This 2-year duration picture that you have in front of you just represents the term securities. So if we factored in the cash component, the overall duration of the total portfolio would be somewhat less than 2 years.
Got it.
Is that-
Thank you. Yep.
Okay.
Thank you.
So on those next few pages, we're going to get back to looking at performance. First on the amortized cost. Again, this is yield-oriented way of looking at performance. So you buy the bonds at a particular yield and you're just going to hold it steady and consider that return over time compared to the 2-year treasury. So here you see in 2020 and 2021 how very low interest rates were, with the 2-year averaging 39 basis points or 27 basis points. Then the Federal Reserve starts to increase interest rates. We get as high as a 4.58 average on the 2-year back in 2023, and things starting to level off and rates coming down, frankly. Portfolio continues to catch up, and here we are in 2025, our first quarter returns just right on top of the benchmark on a yield basis. So a ton of improvement on the yield basis. And then on the next page with total return, you can see a couple of years back in 21 and 22 where we actually registered negative returns. We never had to actually realize any of the negative returns. We always had plenty of liquidity in the portfolio and no credit concerns that would cause us to sell securities at a loss. But when you're looking at this total return basis, you're considering the change in the market value of the securities. And as interest rates rise, we have that negative impact on total return. But even so, the portfolio performed very well relative to the market. And we have on a whole 5-year picture here out through March of 25, the city's portfolio earning at a 192 versus the index at a 116. So significant incremental return on average for each of those 5 years. So that's a great story. Then on the next page, we get into some of the actual holdings in the portfolio. And here's where I wanted to differentiate the cash pieces of the portfolio. So on this page, we're gonna look at the whole thing. We're gonna roll in the cash pieces. And we have the Wells Fargo money market account listed there for you first. That's a $64 million number. That's the money that the city keeps so that we can always make payroll and debt service and anything else that needs to happen, right? Lots of stuff going on. We need to have liquidity. So that's a bucket of cash that's available. That's in the Wells Fargo account. The second piece is the Allspring money market account, and that is a money market account that is an SEC registered fund. It is attached to the city's custody account. So the securities are held in third-party safekeeping. When there's a coupon payment, it spins off and rolls into this Allspring money market account. It becomes available to invest or perhaps be withdrawn for operating purposes. So that cash piece is two pieces. One is the big money that the city needs for liquidity. The other is the little money that we really try to keep low because we don't intend to have a bunch of money in the custody account. That's not the strategy.
So I have a question on that. So, and I think you kind of just answered it. So it sounds like when that money becomes available in that Allspring account, then I assume it's moved into like the Wells Fargo money market for use, or like how is that managed, I guess?
Sure. Well, now that we have these really nice higher coupons in the portfolio, coupon income can be a lot. So we actually were working today because we had like $1 million that was left uninvested, and then several coupon payments that were rolling in. And so that all came together to equal about $2 million. And I reached out to the city and just presented the fact that the cash had accumulated to about 2 million and presented an investment alternative for them to consider. And because they were comfortable with the liquidity that was being maintained in the Wells Fargo account, the investment was approved. So we invested the cash that had accumulated in that Allspring money market account into a corporate bond to to sweep up the cash, get it invested, because there was enough liquidity in that Wells Fargo account to cover operating expenses.
Got it. All right. I appreciate that. Thank you.
Yep, there's quite a lot of communication that goes on with the city staff. They're quite accommodating to review investment recommendations, contemplate cash levels, give direction. It's a real partnership. This is a non-discretionary relationship. Insight doesn't do anything in this portfolio without approval by the city, and so it's a real team effort to come together and understand what the cash flow needs are, and then overlay that on market opportunities and portfolio strategy to actually execute trades. So
Great.
Treasury securities, that whole ladder runs all the way through onto the next page with our final maturity out to April 30 of 2030. 304 million invested in treasuries, and then agencies follow. And I want to be really, I would love to talk to you guys all day about this, but I'm trying to be sensitive to our time commitments. So I'm going to move through these securities pretty quickly. On the next page, you get into the corporate holdings. And again, it's this laddered approach in corporates all the way out to that 3-year horizon. And then on the final page of this part of the presentation are the municipal bonds. And it all boils down to a total portfolio of about 860 million with an average yield as of March 31st of a little bit more than 4% and an average duration of 2.04 years. Okay, so that's where we were on March 31st. The next page gives you a look at diversification. It's kind of appealing to look at it this way so you can really just let your eyes roll down the names that we own in the portfolio. And then on the far right-hand side is the percentage allocation. It's a very high credit quality portfolio. Treasuries are 35% of the portfolio. Government agency securities are 27%. We currently have a 25% corporate allocation in the portfolio. So we are a little bit more restrictive than state statute in investment policy guidelines, limiting us to a 3% exposure per corporate name, which I think is absolutely fine. We like to get granular at Insight. We like to maintain smaller positions. So we de facto are going to have a good diversified portfolio within those policy constraints. So the portfolio is well diversified. And then the last little bit is the upcoming maturities. And as of March 31st, this just shows you what was going to be maturing within the next 6 months. I like to include this right now in particular because it shows the average yield of this 130 million that's maturing is a 291. And we've invested about half of this already, right, through the maturity of June 1. All of that has been invested. That's 62 million. Plus, there was a contribution to the portfolio from the cash balance once we got through those seasonal liquidity needs, put a little more money to work in the portfolio. So there was a lot of investing that got done. What came out of the portfolio from a maturity perspective was held at a yield of like 2%. And what was reinvested in a variety of corporate securities, treasury securities, agency bonds, all came in at an average yield of over 4%. So the realignment of the portfolio assets continues, and we are building a really strong base for future performance in the portfolio, taking advantage of these rates that are available in the market today. So that's, I think, a really pretty positive story, and I'm happy to answer any other questions that you might have.
One additional question I had on the federal agency holdings. I've heard some talk from the administration about changing kind of the ownership structure, but keeping the government guarantee. Like with what's been talked about, how might that impact those investments?
It certainly is a consideration. At this point, it's not something that we are able to really fully reflect in any pricing changes, right? These securities are still trading at super tight spreads to treasuries. So the perception of risk associated with that is quite low at this time. And then although they're talking about potentially privatizing or moving Fannie and Freddie Mac, those are the two that are really in the crosshairs right now, back into private ownership, take them out of conservatorship where they've been for the last decade and let them run on a private basis, but they would still have the association with the federal government and that implied guarantee. That's the latest that we're hearing at this point. It's something definitely to keep your eyes on, but they're not talking about removing the implied guarantee, and that would be something that would be most likely for securities brought forward after the announcement, right? Not I mean, in other words, grandfathering in the securities that were issued with the implied guarantee. And I mean, even removing the implied guarantee is really meaningful. I mean, that would be a big change. So
Yeah.
it's not our base case. We're not forecasting that to happen, but it's definitely something to be aware of.
Got it. All right. I appreciate that. Well, and just kind of in closing, at least for me, and then I'll turn over to Councilmember Bergan. Thank you, Mary, to you and your team for all the work you all do. And then, also to our city staff, working kind of interfacing with Mary and keeping a close eye on our investment portfolio. So good job to everybody. And thanks for the presentation. Councilmember Bergan.
Yes, I want to say thank you as well. It looks like you're doing a phenomenal job representing our city. And I guess in comparison to other cities our size, are we, how do we compare, I guess?
You're the best.
Yay.
I joke, but not really. The portfolio is performing really very well. The policy is current and flexible. The city's super responsive and diligent. I find that it's a high performing portfolio for those reasons.
Okay, thank you.
Yep.
Great. Thanks, Mary. Appreciate it.
Great. You guys enjoy the rest of your meeting. I shall take my leave of you. Thank you.
All right. Next up, Teresa Sedmak, 2025 Heavy Fleet Lease Purchase Financing Authorization.
Yes. So there's an ordinance in front of you that we hope that you will pass on to study session. It is for our annual large fleet purchase. We have typically bank financed most of the heavy fleet, which is dump trucks, fire trucks, things that have a longer average life. The ordinance calls for a maximum principal amount of $8 million for these vehicles. Right now, it looks like it's going to be more like 6.5. The ordinance also specifies a maximum interest rate of 5.25 and a maximum term of 8 years. There are 18 vehicles that we're looking to acquire, split between mostly Public Works, Pros, and Fire. And again, this is a transaction we typically do every year, specifically for heavy fleet vehicles. Happy to answer any questions you have about that.
Yeah, my only question is there a specific dollar cutoff when we would use this method rather than just purchasing outright? Or is it kind of depending upon a lot of factors?
I'm not sure. I think this helps people to budget and kind of smooth their purchases over a longer period of time instead of having the ups and downs that would come from cash financing these large vehicles. So it's more of a smoothing methodology. It keeps our fleet current and avoids those peaks and valleys of spending cash.
Yeah.
But we don't use this vehicle for shorter lived assets like police cars and those kind of things. It's just for the heavy vehicles that would have a longer life.
Okay. I'm okay moving this forward. Councilmember Bergan, any questions? And are you okay moving forward as well?
Yeah, I'm okay.
All right, thank you.
Thank you. Next up, Katie Rodriguez, IGA with Arapahoe County for Voter Service Polling Center and ballot box locations.
Yes, this is an IGA for Arapahoe County to use certain city-owned facilities as VSPC centers and drop box locations for the 2025, 2026, and 2027 election years. This is an extension of an existing agreement that Council has adopted in 2020, 2022, and 2023. So this is just a renewal of an existing agreement for the election years of 25, 26, and 27.
Great. And are we going to have to do something similar with Adams and Douglas?
No, just Arapahoe.
Okay. I'm okay moving forward. Councilmember Bergan, any questions? And are you okay moving forward as well?
I think I am. Just real quick on Ward 2 with the new growth. Are they Adams County? Mostly?
Yes.
I would have to
Yes.
double
Yeah.
check.
Oh, okay. All right.
Yeah, because Colfax is kind of somewhat the line between Adams and Arapahoe, and most of Ward 2 is north of Colfax.
Okay, so we would do the IJ with Adams to ensure that there's voter
And
locations for them.
Right, yes. If they wanted to use one of our city-owned facilities, then Adams County would normally contact us and let us know. I can reach out to them to see if there's any facilities that they would like to look into.
Okay, all right, thank you.
Thanks, Katie.
Right, thank you.
Next up, Trevor Vaughn, marijuana licensing code technical amendments.
Yeah, and this is just a code cleanup, has no practical impact, removes obsolete provisions around the social equity program that expired, and then just updates the code with regards to some of the changes and definitions and wording, kind of similarly to the state code changes that have occurred over the years.
Yep, I'm okay moving forward. Councilmember Bergan.
Yep, I'm good.
Okay. Next up, Trevor Vaughn, non-scheduled psychoactive ingredients and drug paraphernalia implements.
Okay,
It's
great.
Quite the
And,
title.
It's quite the title. Yeah, it does a lot in kind of a little bit of language. And I know, Councilmember Gardner, you and I have had a couple discussions about this. In the interest of time, I'll kind of let you dictate, how much you want to dig into all of this and kind of go over it in a high level. This item is really about consolidating a lot of gray market areas and things that are prohibited but not well enforced. And what we're seeing a lot of in vape and smoke shops, and particularly in areas where you do have open air drug market activity. This has been studied. The vape and tobacco stores have been studied to correlate with crime, even as much as liquor stores. And what we're seeing is a lot of these products in these stores, and in a lot of these stores, particularly the independent-owned ones. Interestingly, when I asked the stores about some of these products, whether it be drug paraphernalia or the psychoactive items or nitrous oxide, they do seem to have awareness with what it's for. They get pretty nervous pretty quickly and evasive, and will oftentimes not admit what it's for. And particularly talking about the nitrous oxide, saying that it's for whipped cream, even though it's in a smoke shop. We're seeing it at the distributors being sold as part of the smoke activities there. So some of the recent developments, we did add tianeptine to the list of items. This was an item that has actually been covered by local media as being particularly addictive. The FDA has been screaming that it's not safe for consumption. It's being sold as a supplemental ingredients list. Is kind of trying to dodge FDA enforcement, and is dangerous. And there was a recent warning out on that. That's oftentimes sold as stuff like Neptune's Fix. One thing that we did also change in the ordinance from what you saw was we added another criteria for future rulemaking regarding items, making sure that the items that we're going to restrict also meet the criteria that they be added propensity for abuse, to try not to restrict items that shouldn't be on that list. So really kind of targeting these items that are not FDA permissible. They're psychoactive in some manner. So they're not generally regarded as safe, and trying to get better enforcement around them. What we've seen at the state level is that CDPHE has enforcement at the distribution level, but not at the retail level. And the state liquor and tobacco enforcement division has not been tasked with enforcement of addressing underage sales such as kratom or any of these items or drug paraphernalia or such. So there's really some gaps in enforcement on these items, and trying to somehow get a consolidated approach where we can go in and inspectors and address it all. The drug paraphernalia items that we're seeing a lot of, they are prohibited already in city code, and so being able to really get at those and ensure people know what they are. I see, Terry, are you in control of this? I can kind of take it over if you'd like.
No, it's me. You can go ahead and do that if you'd like.
Okay.
I'll stop sharing.
So
Candace, can you mute that person who's on the phone, I think?
Okay. So question for the committee. Do you kind of want me to run down through these various items, Chairman?
I don't think we need to. I think you kind of gave a good synopsis of it, and then maybe if there's questions. I mean, I think from my perspective, why I agreed to sponsor this is because a lot of these products are not allowed under FDA guidelines, but we don't really have an effective enforcement mechanism. If that were to ever change on the federal level, then, I would support changing it at the local level. But while that's still the case on the federal level, we need to be able to enforce it. My only question, Trevor, is on the kratom. What can you tell me what changes we're making? Because from what I recall from our conversations, it's allowed if you're 21 and over, right?
Yeah. So what we did, all we did in this bill was we just went ahead and adopted the 21 and over requirement. And we haven't put any resources behind it specifically. I think that'll probably end up having to be something that at least we have the tool if we get complaints about a particular location. My feeling is what the state has done is they created the law that said kratom is 21 and over. Not only that, they've gone a step further here recently with the bill the governor signed this week and put some restrictions around this product about no more than 2%, 7-hydroxy. So there's some limitations on the product itself that it shouldn't be marketed to kids. And we're seeing some of the products that, are now banned by that bill. The scary thing is they didn't really assign anybody to enforce it. And I know state liquor and tobacco enforcement does not do compliance checks on kratom. And they said they will not be enforcing that bill. They said that's left to the AG's office. Well, the AG's office doesn't have inspectors that go out in the field and do regulatory enforcement. They'll pursue manufacturers, distributors. So it's really this gaping hole of they passed this law, had publicity around it, but not anything behind it. And so my sense is I believe the retailers know that. Why wouldn't you? And some will be responsible, but when we're kind of looking at the behavior of some of these smoke and vape shops, and still the amount of failure rates that they have on tobacco, there's a good chance this kratom is ending up in the hands of kids.
Yeah.
Because there's just nothing behind it. What I think the state should have done, and I've seen this done in other states, would be, assign it to tobacco, enforcement so that they would cover all of this, not just the kratom, but maybe some of these other psychoactive items, which my sense is particularly nitrous oxide, because I've seen such an increase in that recently in the stores. The tanks are getting bigger, they're flavored. Like at some point, it seems like that's going to come to a head in this state. It is in other states. But there's just this kind of this hole where, even on tobacco, you have the wholesaler is regulated for tax purposes in one division of the Department of Revenue, and you have the liquor tobacco enforcement that really is regulating the retailer, but specifically for the purposes of minor compliance. So, what we could do with kratom here, now that we have the new bill, and we're already going to be looking at, assuming this passes, looking at the products in the stores, we could add a line in this too to say, the products that they have for kratom must comply with that new state law. And it would be something we could address again, giving that holistic approach, address it all at once. And then down the road, as far as minor compliance, that's something, we could talk about specifically as you get into the next ordinance with the moratorium. Would there be something at the local level you would ever want to do to try to ensure that the kratom isn't ending up in the hands of kids?
Okay, so I want to make sure I understand this. So sales of pure kratom, pure form will still be allowed for people 21 and over. Mm-hmm. This will address non-pure form as well as minor compliance.
We didn't have that in this version of the ordinance. We can add that, before it goes to study session, because there's that new state law that said that. But when we had this draft of the ordinance, that state law was signed into effect last week. So we weren't going to wade too far into the kratom issue, because it would have, at risk of being counter to what the state policy was on that. So we could amend this ordinance for that.
Okay. Well, I think so before we bring this forward to the rest of council, can you and I meet to talk about that a little bit more?
Sure.
And I have a concern.
because I want to understand that.
Yep.
Councilmember Bergan?
Yeah, I don't even know why we would allow it, even with the state law, because there's not going to be enforcement.
Yeah, that's a policy call. Parker has kratom banned, but the state has allowed kratom. I
Yeah,
think
the state has caused a complete decline in our economy in terms of kids being, addicted to so many drugs. I mean, I chair the Arapahoe County Opioid Governance
Mhm.
Council, and we have technical experts that give it their expertise in terms of what's going on with our kids being addicted to so much of these opioid related type of drugs, and it's all kind of and marijuana, or people say it's not gateway. The experts will tell you it is. All of this to me has had such a negative effect on our kids in our state, with crime, with addiction problems, that I don't even want to have the kratom allowed. I mean, I'm good with your ordinance. I'm disgusted by what's happened to our state.
and council member, there might be an alternative down the road too, where similar to Denver, Thornton, and other jurisdictions, you could have a local licensure program that would
Mhm.
then fund compliance checks at the local level. So you can make sure at least that, if you did allow it, it'd be, some at least checking to try to make sure it stayed in the hands of people over the age of 21 and that the retailers weren't selling it to kids.
Yeah.
So that's just an alternative I throw out there,
I
having a
find
combined
it
tobacco.
ironic
Yeah.
that we allow all this, and then on the other hand, we're having to sue pharmaceutical companies and so forth to help, the adverse effects of kids that completely destroyed their lives, and then an increase in homelessness and everything. So I find it so ironic that this state has gone this direction, but this is just my editorial comments.
Yep. I've seen that research as well.
Well, Trevor, we'll talk offline, because I mean, we don't need to get into a whole debate about it, but kids drink alcohol and kids smoke cigarettes, and we're not moving to ban those either. So just because kids can get access to something doesn't mean
very dangerous.
And so is alcohol, and so are cigarettes. Alcohol is extremely dangerous, and we don't move to ban alcohol. So there's a difference between an adult making a choice of what they put into their body and saying, well, we need to ban it because kids get access to it. If that's the case, then we should ban alcohol because kids get access to alcohol too. I mean, it just, I'm not, that's a hill I'm willing to die on. So we have created this where some things are acceptable because socially alcohol use is socially acceptable. So we would never touch that. But there's a lot of kids that drink alcohol and get into car accidents and die.
Sure. No, I'm not for that either.
Well, but I'm not hearing any talk about banning alcohol because kids get it. I mean, so whatever. We don't need to get into a whole debate about it.
And how things are packaged. Yeah.
Yeah, for sure.
They look like they're packaged for children.
Yeah.
Mhm.
Anyways, all right. Well, Trevor, let's talk offline. And then, I mean, I don't know. We can decide how we want to address it. I just, if this turns into more than what I expected, then another council member can sponsor it, and that's fine with me. But, and I'll vote how I need to vote. So,
Yeah.
all right.
Just to comment to, in that regards too, this ordinance currently is focused on things, like we said, that meet the criteria. They're not grass, so not generally regarded as safe, or they're otherwise prohibited, or they're being sold in a manner such as nitrous oxide, not intended for that use. And so it's kind of left within that concept. And so maybe if it stays within that, maybe that kind of helps resolve that debate, because kratom is otherwise legal in the state of Colorado, and potentially, addressing that in another manner. And I would say on the kratom, that compliance with that state law would be easily resolved in this simply by referencing the state law, which we can talk offline on that.
So I have a question on the FDA. I thought you said that none of these were allowed under FDA guidelines.
So, correct. Yeah, they're non-grass, these psychoactive ingredients. The one caveat I'd say to that is the nitrous oxide. because it's actually not being sold for human consumption, even though it's actually being sold for human consumption. Plenty of evidence, in the photos and everything I'll show you. So it's, the other things are actually human consumption, but they're not safe for human consumption. The FDA, I've included all the documentation showing that the FDA has put out warnings on it. But the nitrous oxide in Colorado is currently kind of this hole in regulation that hasn't been addressed. And I think you're going to hear stories of people getting sick or killed off of it before long.
Okay.
All right. Any other questions or comments on that one? Okay. Well, Trevor, let's schedule a time for you and I to talk, and then we can decide what to do after that. Because if I continue to sponsor it, I can bring it to study session from there. So.
And I'll be happy to sponsor if you don't want to.
Next up, vape and smoke shop moratorium. Trevor.
Okay, and Coombs and Medina had signed onto this. I don't know if Coombs made it online.
I don't believe so.
Okay, and then I'll kind of talk about that because that what we just talked about is a lead into that. We have 57 that I've counted that would meet the criteria of being a vapor smoke shop. They would be grandfathered in. They could sell. They could operate. This is a 6-month proposed moratorium on new vape and smoke shops. There was a bit of a dust up recently, I think, with the community in Northwest Aurora, where we had yet another vape store open up there, selling the items we talked about. In basically that stretch of East Colfax, there's a half-mile stretch that includes the Arts District. I'd counted 6 and then up to 7 vape and smoke shops in that segment. And then you combine that with 5 pawn shops, 2 liquor stores, you've kind of multiple check cashing businesses. You've got what's really kind of a targeted poverty industry that, makes the area challenging to bring in, traffic. And so we've seen that in a few other places in the city as well. And part of the thinking behind this moratorium, and this is not unique, this moratorium, we've seen it in other places across the country. Particularly, it kind of catches on in certain states like Wisconsin, Ohio, California, where they've had a lot of similar issues with vape shops, and they've kind of picked up on that, and then how to kind of regulate them. And so the moratorium basically gives you time to kind of study that, catch up on this enforcement of the unregulated psychoactive items and that drug paraphernalia they're selling, and then talk about other strategies, which could involve zoning, spacing, could involve tobacco retailer licensing, and exactly, maybe how they co-locate with other uses such as liquor, so that you can kind of, keep a healthy environment. So that's, I think, the basis of it. A couple things on the vape stores, I've mentioned with you, Councilmember Gardner, is that we have seen them advertising to take EBT. We have seen them committing EBT fraud when we've done audits by booking tobacco and other products under the electronic benefits. We're talking about federal food assistance, and seen them booking them as groceries, and we're seeing some of that activity up on Colfax, and there was an article about that. So definitely there's some targeting, that's been studied, again, related to crime and concentration in areas where we do have open air drug markets, and challenges we're trying to address, like in East Colfax.
So, I mean, Trevor, I know you and I talked about this one, and I didn't agree to sponsor it. I'm not in agreement with a moratorium on illegal business, right? I mean, that's essentially what this is. Now, there might be illegal things happening at legal businesses, but I don't think that means it's appropriate to place a moratorium. There are illegal things that happen at all kinds of businesses across our city, and we don't place a moratorium on them. I mean, should we place a moratorium on liquor stores? I'll just use my example from the last ordinance. Should we place a moratorium on liquor stores because of the illegal activity that happens there, to study the community impacts? Like, I just, there's one thing to regulate, but this to me over regulates and goes after what it otherwise could be a legal business. And so I'm not supportive of it. For Councilmember Coombs' sake, I know she's not here. I'm fine moving it forward to study session so the rest of the council can weigh in, but I'm not going to be supportive of a moratorium. Councilmember Bergan?
I am not typically in favor of moratoriums either. I think it's more important to enforce the law. So I guess I think what could be looked at is, I mean, Councilmember Coombs could bring forward some changes on zoning, I guess, right? That would be a separate type of ordinance. That maybe solve some of the problems of concentration in a particular area. But I personally probably would not support a moratorium either. I would wholeheartedly support, vigorous enforcement of laws. So I don't know if you want to.
So I guess, I mean, are you okay with it moving forward and then for the full council to debate, or what do you want to do?
I mean, would Councilmember Coombs look at maybe changing this a little bit instead of a moratorium and do some other, I don't know.
Trevor, do you want to talk to Councilmember Coombs offline and give her some feedback, what you heard here, and then can decide what you guys want to do?
Yeah, and maybe just a little bit of clarification. This is a 6-month moratorium to look at other regulations, just to give you time rather than having more will continue to open up. So the proposal here is a temporary moratorium because it may take more time. We're not ready with other proposals at this time, but can take more time. That may involve more decision points for council, such as distance restrictions, retailer licensing would be 2 examples as to how you may want to address or not tobacco retailing. Well, we say tobacco, kratom, and this type of retailing within the city. So maybe that's just a little bit of clarification, and then I can take that feedback to Councilmember Coombs and Medina and see what they want to do.
Okay, sounds good. Thank you, Trevor. Appreciate it.
Yeah, thank you.
Next up, Tyler Phillips, surcharge ordinance inflation index update.
Good afternoon. Tyler Phillips. I'm a budget program manager in the budget office. So this is just a technical change to the surcharge ordinance in the city code, which will update the inflation index because the one in the code no longer exists. So I'm happy to answer any questions that you may have on it.
Yeah, so my only question is, I'm assuming this is the case, but I just want to ask it. Do we still feel like this index kind of most closely represents the cost increases that we see for providing these services? Because there's a lot of different CPI indices out there. So just want to, I guess, ask that question.
Yeah, and anybody else can chime in too, but my understanding is that's the one that we always use. So we're changing it from the Denver Boulder Greeley to the Denver Aurora Lakewood, which is encompasses the full metro area. And so it's really just a name change is all. But that is the one we use.
I get that, but if we're gonna make a change to the ordinance, this would be a time if we wanted to look at another index to do it. And there are a lot of different indices out there. There's like in my industry, there's the water sewer trash index, right? Like there are a lot of different indices out there. And so my question is, do we still feel like the all urban consumers CPI index, which is a basket of goods that may or may not actually reflect the cost increases we see in the city for providing these services, do we still feel like that's the appropriate index to use? I don't.
Greg or Terry, does anybody else want to?
Yeah, I don't know if we actually went through and looked at it that way. We were replacing like for like. We sure could go take a look. My initial feeling is that they're all going to be in the same ballpark typically, and this is the closest one to the big basket of goods, right? The most normal. So, but we can definitely take a look if you want us to just double check and make sure there's not something better out there.
Yeah, I think we should. I mean, because there are ones, tied to government service. Like there's a lot of different indices out there. And I think if we're going to make a change to the ordinance, and if we feel like there's a better index to use, we might as well make that change then. If, like I said, if we feel like this is still the best option, then great. But I want to make sure to ask the question.
Okay. Okay, Hans, do you have any more information on that question?
No, we're just gonna go ahead and take a look at it, and if this is the right one, we'll leave it. If we'll find something else, we will notate it, and then we'll let you know, hey, we found this other one, and we will change it on the ordinance. It's very technical, very simple.
Well, yeah, I mean, changing the name is technical and simple, but there might be, like I said, again, and maybe I'm not being clear, but there's a lot of different indices, CPI indices, right? And there might be a reason why we want to use a different one. For example, some indices don't see as wild swings up and down. Some only contain certain, kind of in the basket of the calculation, only include certain things that might more closely align with the cost of providing government services. So yes, I understand changing the ordinance is easy, but the analysis of what is the index that's most appropriate for us to use that accurately accounts for our costs, there's a lot more that goes into that. So that's, I guess, what I'm asking is doing that.
We'll take a look.
Okay.
Absolutely. What I've been is changing the wording on the ordinance to present it to study session is something that I can do quickly if we find something. Yeah, sorry.
No, I got it. Councilmember Bergan?
Yeah, I maybe I didn't read the whole backup correctly. I thought it was for courts. Is this for all government services? I thought it was just for municipal courts.
It's just the surcharge for courts.
Oh, it is for courts. And I thought we just increased that a couple years ago.
So there was a change made back in 2017, I believe. And when the ordinance was written, there's a clause to allow for inflation. So all this is doing is a technical change to the index that's used for the inflation. It's not changing the surcharge. It's just changing the index that's allowed for the inflation.
No, I know that, but I thought you said the index went away.
So the one in code is the Denver Boulder Greeley Index. It used to be a conglomeration of those three areas, and that went away at the end of 2017 and was replaced by the Denver Aurora Lakewood Index. So it's essentially the same index. It's just a name change.
Okay.
That's why we're saying it's just a technical change to the language, because it's no longer called the Denver Boulder Greeley Consumer Price Index. It's now called the Denver Aurora Lakewood Consumer Price Index.
Okay, thanks.
So that's all.
Okay.
Are you okay moving this forward, Councilmember Bergan?
Yes.
Okay, sounds good. Next up, Michael Kerrigan, ACC Metro District Service Plan Amendments.
Good afternoon, council members. I'm Michael Kerrigan, Special Districts Administrator within the Development Services Department. My first item for consideration is the second amended and restated service plan for the ACC Metropolitan District and the associated intergovernmental agreement between the district and the city. The district is located in the northeast intersection of Piccadilly Road and Smith Road. The district was first approved and created in 2003, and the service plan has been amended 2 times previously. The district was created in order to help finance the public improvements for the commercial development project known as Aurora Commerce Center. The district anticipates undertaking construction work for improvements to Piccadilly and Smith Road in the near future, and the district plans to issue bonds to pay for this work. In order to undertake the work, the district needs to update its service plan to reflect the estimated costs of these improvements and increase its maximum debt amount. The district is using the city's model service plan for this amendment. This item will also require a public hearing, which is slated for the June 23rd council meeting, assuming approval here and then at study session. And then we have representatives of the district here to answer questions as well. Thank you.
Thanks. I'm okay moving forward and no questions. Councilmember Bergan?
Yeah, I'm okay too.
All right, thank you. Michael Kerrigan up next again, Porteos bid property exclusion.
Great. So good afternoon again, Michael Kerrigan with Development Services Department. My next item for consideration is an ordinance to change the boundaries of the Porteos Business Improvement District. The BID has previously adjusted its boundaries in 2019 following the same procedure. The owner of an approximate 8.1 acre parcel of land is requesting that the land be excluded from the BID. The owner originally purchased the land in 2021 with the intention that it be excluded from the BID. In 2023, the BID approved a motion during a board meeting to exclude this land from the district. The BID has not issued any debt, so the excluded land will not be responsible for any share of debt obligations related to the BID. This ordinance for City Council consideration is the culmination of the statutory process to exclude this land from the BID. The owner has provided the statutorily required petitions for the BID exclusion, and a map of the BID boundaries is included within your packet. And then also once assuming approval here and then approval at study session, there will be a public hearing which is slated for the June 23rd council meeting. And then we have representatives of the landowner here to speak and answer questions if needed. Thank you.
No questions for me, and I'm okay moving forward. Councilmember Bergan?
I'm okay moving forward as well.
Thank you. And then up again, Cottonwood Creek Metro District 3 through 5 Service Plan Amendment and 6 through 10 Service Plan Approval.
Great. Thank you, Michael Kerrigan again. So my last item for consideration is an ordinance to approve the amended and restated service plan for the Cottonwood Creek Metropolitan Districts numbers 3 through 5, approval of the service plan for the Cottonwood Creek Metropolitan District numbers 6 through 10, and authorization to execute an intergovernmental agreement between the city and the districts. The districts are located at the southeast corner of East Jewel Avenue and South Monahan Road, and are planned to be used to finance the construction of the public improvements for the project known as Cottonwood Creek. District numbers 1 through 5 were created in 2015 and were envisioned to facilitate the development of the entire 1,267 acre Cottonwood Creek development project. Until earlier this year, the entire Cottonwood Creek 1,200 acre project was under common ownership, and the plan was to use district numbers 1 through 5 to facilitate its development. In April of this year, approximately 660 acres were sold to a new unrelated developer. As a result, the development of the entire Cottonwood Creek project may occur at different times now. So this new diversity of land ownership and development timing necessitates a change to the current Metro District structure. To that end, the new landowner has requested an amendment to district numbers 3 through 5 and the creation of districts 6 through 10. Amendments to district numbers 3 through 5 include updates to the estimated costs of public improvements, updates to the estimated build-out population, updates to the debt limit, and updates to the ARI mill levy definition. District numbers 3 through 10 have used the model service plan with one small change. So technically it's not considered a model service plan, but 99% of the language in the service plan is the same. So that the one change that they are changing that classifies it as non-model service plan now is that they are adjusting the definition of the ARI mill levy. So instead of using the graduated tiering system for the ARI mill levy as it is defined in the model service plan, these districts will have a flat 5 mills for 40 years. So this treatment of ARI mills seeks to fix that imprecise amount and the timing of the model service plan ARI definition. So this will make the ARI mill levy more certain and less risky to bond against. Although these Cottonwood districts are not part of SRIA, this change to the ARI definition is very similar to the fix that we processed earlier this year for the SRIA districts. District numbers 1 and 2 will remain unamended and operate under the original service plan. And then assuming the item moves forward today and then through study session, there is a public hearing that's slated for the June 23rd council meeting. And we have representatives of the district here to answer questions as well. Thank you.
Thanks. Appreciate the explanation. That makes sense. Councilmember, I'm okay moving forward. Councilmember Bergan?
Yes. Sorry, because I had to text somebody on a issues. I wasn't 100% there, but did you say it's flat 5 mills for 40 years? So there's no tiers?
Correct. No tiers with this, and then it's the same for that entire 40-year term.
because I mean, even under the Saria ones, even the new ones, it was just the last tier that,
Yeah.
well, no, it was the first tier that I guess on new districts that had the 5 mils for the first 20 years.
Yeah,
And
yeah.
then
I
they
guess
had-
what I meant with that was we're adjusting the structure of the ARI to make it a little bit more certain and to make it easier to bond against. That was what I meant by how it's similar to Saria.
And did you mention the amount of debt that they need for the infrastructure?
Yes. So the amount of debt for the new service plans is $330 million, and that is up from $220 million from the original service plan.
And that is for what infrastructure?
That is for updated infrastructure costs of $257 million, up from the original estimate of 150.
Or do they define what, I mean, it's specifically what they're using it for? Like in the Saria, it's like specific roads.
Oh, right. Yeah. So this is not, it doesn't have specific infrastructure that is listed like specific roads. It's general infrastructure like water, sewer, roads.
So all right. So if a resident buys into that district, they won't know what the money's going towards
It will be,
specifically?
so it'll be funding for all of that infrastructure that is needed to build those, houses, to
the
build that
whole
neighborhood.
sewer, water,
Yes.
everything.
Yeah.
That is part of your metro district fees or taxes though. So ARI, isn't that supposed to be outside of that?
So that 330 million, that's the, I thought you were asking about the debt limit for the district. The 330 million is the debt limit for the district. And then the ARI has another debt limit of 330 million as well, but there's
Right.
there's no plans yet for what the ARI will fund for this district. And then this
Okay.
district has not joined an authority yet.
So why would we approve this before? It seems like we're taking the cart before, or the horse before the cart.
Yeah, so in actually all of our service plans, we always have a carve out for the district debt, and then on top of that amount for ARI debt.
Right,
and then
but ARI debt is typically, hasn't it typically been for transportation projects?
It is, yes.
And yet we can't define what projects are going to, I mean, I'm looking at it from the resident perspective, that you would come in and pay your metro district tax for all that debt that is supposed to build the internal infrastructure, and then turn around and say, and forever, for 40 years, you'll be dead after, by the time that's paid off. You don't really know what that's gonna pay for. I mean, can they go back and like maybe work on projects to define it?
So right now, this district is not part of any ARI authority yet. So there's no.
Well, so then how can they have an ARI tax?
Because that's the way that the service plans are written. We authorize a maximum amount for.
Yeah,
metro
I
district
know,
debt, and
but
then
we're
authorize a maximum
changing a
amount for
flat
ARI.
5 mils for 40 years. That's quite different than what has existed. I guess I'm not okay with it.
Can I ask real quick, just to add to this? I think a lot of times we authorize debt ahead of really needing the debt. Is that what's happening here, Michael?
That's what is happening here, yes.
Yeah, so it's really just to prepare for future debt issuances. It's not an obligation necessarily at this point until the debt is issued, when we actually know the projects that are needed for the district. So
Okay,
I think we do that in advance on a lot of these areas that are being developed so that we can plan ahead, be prepared, and then when the development occurs, then we can issue the debt and have the pre-authorization.
Okay, but when that happens, then you can't change the flat 5 mils for 40 years. It's in the service plan.
They could change it in the future. We can follow that
They'd
same
have to come to
process. Like,
council and
Yep,
then
yep.
have a vote of, I mean, that's a big nightmare. I don't, I just have an issue with it.
I don't know. Maybe is there a rep from the district that maybe might have some additional comments you want to make in regards to the ARI debt and
I mean, we're
Yeah,
like
sure.
collecting all this money for, and we don't even know for what. I mean, the residents will be paying for this, and at this point, we're giving authorization in a service plan for all this debt that we don't even know is needed, and yet you're gonna put that on future residents. And it will be hard to change that ARI.
Yeah.
Just went
so
through
hi-
this with my area with Saria. And it was like a nightmare with one particular neighborhood that I believe was gonna sue the ARI or the Saria.
Yes, hi there. This is Audrey Johnson. I am with White Bear and Ankley. I'm here on behalf of the districts. So this change has been brought forth before you after several discussions with the city. It's really designed just to allow for more certainty in the debt capacity moving forward. I have not been a part of the previous conversations with the city in particular about this shift away from the tiered structure, other than to know that it is designed to just provide more certainty for everyone involved, from the bond market to the residents.
No, and I get it, definitely provides certainty for the developer. I get that, but for the resident, and I understand if you wanted, like the way it originally was, the 1 mil for the first 20 years, obviously we weren't ever able to collect enough money to do transportation projects. So I understood why it needed to change, but to have it flat for 40 years without knowing what infrastructure that it's actually going to go towards, it's a bit problematic.
So no debt would be issued until there is a plan for the infrastructure. It's I believe
Right, but you can't change the ARI is not going to be able to be changed. It's going to be in the service plan.
Correct.
Correct. Okay.
And it's very similar to the way that the regular Metro District debt is set up right now. You know, we've got a maximum of 50 mils for regular Metro District debt.
Right.
And then, you know, that term lasts for the 40-year
Right.
maximum debt imposition term.
No, I
So
get that.
it's and then when you've got the max dollar amount that we can issue, but
Right.
yet there's
I totally understand that. But that's different than adding on a regional infrastructure debt for 40 years for something. The whole point of the ARI was to be able to take care of regional transportation gaps. And we don't even know what the gaps are. We don't know what the projects are. And I was actually hesitant on the changes that happened to the recent Saria until we knew the projects. And once we had confirmation that the projects were staying the same projects, then I was okay with it. Like, had they taken away a project, I wouldn't have been okay with it. And I guess this is like, you're saying the debt's not issued, but this doesn't, the ARI is not going to be able to be changed without a lot of heartache.
I think from my perspective, just to jump in here though, and Michael, correct me if I'm wrong from what I'm saying, but if we do not include this in the service plan now, later on, we would also need to do an amendment to the service plan. And if that's not able to pass at that time for whatever reason, then that could severely limit our ability to do these regional projects. And so we're not issuing debt now. We're not tying them to any specific dollar amount. We are purely giving the flexibility to issue debt to be involved in these regional projects in the future.
Correct. Yep. It's like authorizing a box to play within, and then when it comes later, then you can determine, you know, what to actually build within that box, because
Yeah, but,
you know, your box gets you this.
But the developer is not going to, once they issue debt, They're not going to then go, oh, let's change it to 5 mils for the first 20 years and then ratchet it down. They're not going to do that.
Correct. Well, they may. I don't know what, anything could happen in the future, but
that would be up to the Metro District Board at the time, wouldn't it?
It would be, and then subject to.
Yeah, but who's the Metro District Board? Is the developers.
Well, but that's how Metro districts work. That's how we finance projects in Colorado. Like, I
I
mean,
know. I don't have a problem with the Metro District financing part of it at all. I have a problem with the ARI being changed with no projects. Like,
well, but like I said, if we don't authorize it as part of the initial service plan, however many years in the future, when we have identified those specific regional projects, if there is not authorization to amend that service plan,
yeah.
Then we're shit out of luck.
Okay, so is there a way to put just something in there that says flat 5 mils, unless the infrastructure, whatever those transportation projects, unless they are not needing all that money, but I'm not saying this the right way, but I think you're getting the gist of what I'm saying. If let's say they're collecting the 5 mils and year 20, they had only identified, I'm going to make up a number, 50 million of debt for the roads, and they don't need any more money. Can they get rid of the 5 mils? Can they end it? Because under current SRIA, you can't end it.
Right, so they could, and it's subject to whatever debt is issued in the future. But the maximum,
they can continue to issue debt, right?
But the maximum that 5 mils could go for is 40 years. It can go for any amount sooner than that, depending on what debt is issued, the characteristics of that debt that's issued sometime in the future. It could be something like a 5-year term debt. So then you would only need to raise revenues for those 5 years with those 5 mils. One example, multitudes of ways to skin that cat.
So if they pay off the debt on the regional transportation projects earlier than 40 years, the 5 mils definitely goes away? Or does it go to the city?
It could go away. And then the way it's, let's see, give me a second here to verify how it's written.
Because I thought it never went away, because I thought whatever, it went to the city then.
If I could interject, please, while Michael's pulling that, Chesarina Dancy, Manager of Development Assistance. It's been a few years since we talked about those metro districts that are within ARDA, but I will say this is the standard language that all of those districts in ARDA have as well, with the flat 5 mils. So we do have some precedent for this, and we can certainly look at, maybe that's not how we want to move forward, or if we want to add additional language. But I just wanted to mention that those metro districts that are part of ARDA also have a flat 5 mils.
And that's a lot of metro districts within ARDA.
Yes.
Is this just one metro district?
This is one, yes.
Yeah, there's a big difference. Is there any way to put some kind of protective language to add on?
I think we can look at that.
Would that be okay with you, Councilmember Gardner, if we just look at some kind of protective language?
Well, I guess to me, the restriction of 40 years for 5 debt and max debt limit and max debt amount of 330 million, that is the protection. That means that that is the max we are allowing them to authorize. So I guess I'm not understanding what
you can authorize. Yeah, but
ahead.
you can. Okay, so you authorize that debt, but if are they just going to add projects nilly-willy?
Well, we need an answer to your question. So if they issue X amount of debt for the regional infrastructure and then it gets paid off sooner, what happens? Does that 5 mils just go to the city? Like, what happens with that?
Right.
I think we need the answer to that question.
Yeah,
right.
Yeah. So there. So I just reviewed the service plan. So the definition reads, it should be 5 mils for collection. Collection within the first year that the district issues a debt service mill levy, and then continues thereafter for a term of 40 years. So there's nothing in there about tying it to any specific debt issuance. So, and it's silent on what happens to the revenue
Right.
if the debt is paid off before the 40 years.
That's, I guess that's the question, is what if it's paid off?
Well, you know, is there anybody from the outside council that can answer? Like, I guess, is there a way we can answer this question today? If not, I mean, can we bring this back next month, or I don't know, but I think we need an answer to that question to get Councilmember Bergan an answer. So
Is this time sensitive? Can we push it off to next month?
Oh, Audrey, go ahead. Sorry, I saw your line. Come on.
Oh, so the new districts are aiming to organize at the November election. So moving forward is a bit of a time sensitive matter for these districts.
But
so
it's not.
Audrey, do you know the
1
answer to
month
the
is not
question
gonna
that's
be-
being asked?
I'm sorry, could you repeat the question?
Do you know the answer to the question that Councilmember Bergan is asking?
About what happens to the revenue as soon as the debt is paid back?
Yeah.
I will say that the mill levy is set, of course, by December 15th by the board each year. So if there's not debt to be repaid, it's usually like the mill levy is adjusted to
No, not on that.
to match the debt.
So if the debt is paid off, then there would be no mill levy.
No, that's not right. It's not right.
Yeah, I think it is a the service plan is silent on kind of this instance that could happen. Oh yeah, go ahead, Terry.
Could I just suggest that we have a follow-up meeting with Laura Perry and Councilmember Bergan, and then try to resolve this before it moves forward, but tentatively approve moving it forward with that resolution discussed and understood. Is that okay? Councilmember Gardner and Councilmember Bergan, if we would approach it kind of offline, and then if we can come to a resolution, move it forward to study.
Yeah. And what happens if there's not a good resolution to it?
I think we have to hold off till we do get a resolution to move it forward.
Right. Okay. I'm okay with like having that discussion, and if there's no resolution, I think I would not want it to move forward.
And I also think the other thing we'd have to think about is the consistency that Chesarina brought up with other districts.
Right, but those are a lot of districts within ARDA. This is one.
Yeah, and then equity from maybe our legal staff's review of this as well. So let's take that offline if you're okay with that, and then we could come back with, if we need to have further discussion, we can come back to M&F. If we can come to a resolution that's acceptable and let Councilmember Gardner know as well, then we can move it forward.
Okay.
To study. Okay.
Good with me.
Okay.
Yep, that works for me.
Yeah, we'll reach out, Councilmember Bergan, and get something coordinated.
Okay, thank you.
Yep, thanks.
Let's see. That is our last item. So our next meeting is scheduled for July 3rd. I'm here. Councilmember Bergan, are you in town? What do you want to do for that?
Unfortunately, I'm in town.
Terry, will that, I think we could probably keep the agenda light, but I don't know what that looks like for city staff.
We're just verifying the agenda right now, so we're in that process, but it hopefully will be a very light agenda.
Okay, well, let's keep that, and then if anything changes or needs to change, we can, but let's keep the July 3rd at 1:30. And with that, we'll adjourn and see everybody next month.
Thank you.